You're welcome. Um, okay. Okay, so guys, good morning. Good morning. Have entered. I was still waiting for confirmation. I would have told you guys. I'm still waiting. What I told you I'm waiting for, I have not gotten it yet. So I'm still waiting. All right. Yeah. So guys, kindly copy the link and share to let people also join. I hope you guys can see my screen clearly. Let me know if the screen is visible. All right, good. All right, so this is what I was actually waiting for, of which I have not gotten yet. So I still wait. I told you guys that I am actually expecting that this particular candle, the H1 candle, which closed, will close strong bullish. Okay, then I will put a buy limit at the entry point right here for the market to come and tap and then fly. But I did not experience, I did not see that. So I will still wait for that pullback to happen. And once the market give us a confirmation that yes, it's ready to fly, we will surely go into the market and trade. If you don't see anything like that, I will still wait because this is likely to be like a double top formation. All right, double top. And as you can see, the zone is more valid. Look here, right? So the zone is more valid. The market has tested and it is pulling. So how far can it pull back? Once it gets to the entry and we get some rejections, we can push the market all the way to the next resistance level. All right. So what we need to do is to exercise more patience and wait. Once the confirmation is clear, we are all going to go into the market and trade. All right. If no confirmation, it means we still have to wait. I'm trying to stream live on Facebook, but it looks like it's not working. So we are only going to buy once we get that. Okay, it's Odo. Okay. Oh, I just explained. The pullback is coming to your zone. That's what we are waiting for. No pullback, no entry. Okay, no pullback, no entry. So we still wait. We still wait. Yesterday, gold did this. I have collected my buys at 78. All right, good for you. Okay, so you bought already and now you closed. All right, that's fine. But you shouldn't have closed. Sometimes when you enter, if you really want to make money as a trader, you should have a robotic mentality, such that once you enter, it takes either stop loss or TP, no manual closing. And this is where the real money comes from. All right. Trying to close, enter, it really doesn't help anybody. So learn that skill. It's actually a skill from God, believe me, because it's really difficult. Trying to hold trade to full TP or SL, it's something very difficult. If your psychology is not really strong, it's going to be really difficult for you, especially when the market is about to hit your TP and it doesn't hit and it comes back to your entry. Nothing is as painful as that. But believe me, in the long run, it will pay off. You understand? So if you are trading, once you enter the position, say to yourself either TP or SL. All right, either TP or SL, and you are going to be good in the long run. So, of course, you can see it's flying, no pullback, no entry. So, another alternative method we are going to use is that if we don't get the pullback here for an entry, we are going to wait for a breakout. Okay, we are going to wait for a breakout at this zone. Then at the pullback, we can take entry from there. So these are the two ways we are going to tackle the market today. It's either we are waiting for the pullback to happen or a breakout, a retest, and a fly. Okay, so these are the two scenarios, and whichever way we are going to watch to the very end. No rushing to trade. Nah, don't do that. So just be on the sidelines and wait. So do you think we are going to break that zone, or the market is going to return to our entry? What do you think is going to happen? What do you think actually? So for me, this level might be broken. Yeah, good morning. Guys, can you copy the link and share? Invite more people. I'll try and stay here as much as possible, maybe even during the New York. Yeah, I'll try and leave the live on. Even if I go out, I'll still come back and continue from here. So this live will hold for like 7 to 8 hours today. Invite more people. Let's stay here. Let's trade together. And let's see what we can actually get today. All right. So what do you think is likely to happen? Do you think the level is going to break, or we are going to retest? It's going to still respect and drop. What do you think is going to happen? So this was the exact pullback that was supposed to come to our entry for us to take the trade, but you see, it did not really get to the entry for us to take. People from Redemption, I think we should create a group to help each other. But you're already in the groups. Is that not a group? It is a group, bro. You can post whatever analysis you want to post. Yeah, that's the goal. At the end of the day, you share your outlook, what you are expecting, and the results you got from that particular trade. All right. Now you have the ebooks, make good use of them. Um, The backtesting ebook will be ready, I'm sure, by weekend. All right. Then I will send that one to you guys as well. So make use of the tools. And also, you also have access to the Notion templates. Use them. If you have any difficulties, go to Chat GPT. Ask, I want to do this. How can I do that? It's not always that you have to wait for somebody to come and tell you, how can I do this? How you can do this? No. Use the AI tools available. DeepSeek, ChatGPT, got plenty of them. All right, plenty of them. Make good use of them to help your day-to-day activities and all that. It was meant to be used, actually. All right. Yeah, so you want to do backtesting, you don't know the approach to use, just go to Chat GPT. Okay, so I want to backtest my strategy. How can I go about it? It will ask you a few questions, then it will guide you back to back how to really go about it. You don't really need to stand still and waiting for me to come and tell you, okay, so you have to do this, you have to do that, you have to do that before you do it. Okay? Uh-huh. Yeah, so guys, make good use of the tools you have, and believe me, you're going to be good. You're welcome. So this is what I want you to do. Those of you in the redemption VIP, make sure you are always in the morning, you submit your analysis, what you are waiting for, what you are expecting in the market for the day. All right, you drop it. And then after the trading day, you submit your results. Okay, so this was the trade this was the trade I took this morning, and this was my result. This was the mistake I made, and this is the lessons I've learned. All right. Yeah, so be accountable every day. And believe me, it's really going to shape you. If you know that you are going to be accountable for the things you do on daily basis, you are not really going to make some shit decisions. All right. You will wait for the proper setups. You will wait for the right things to be done before you go into the market to trade. You will not just trade randomly. You will not just do things anyhow, because you know that if you do them, you are still going to be accountable, and we are going to see the results you get and how shit you became during the day. So since you don't want to be embarrassed or something, you are going to do the right things. And there is one fact of which you need to know. If you should be honest, because I will not be there. I wouldn't know what you are doing. So if you lie, it's over to you. At the end of the day, you are lying over your own progress. You get it? So be honest as much as possible. And let's see, yes, the real shit you are doing, it will help you to shape yourself with guidance, and believe me, it's really going to be of good help. That is all what mentorship is about. Mentorship is not about teaching you. No, mentorship is different from teaching. Okay, but when it comes to the forex space, if somebody is looking for a mentor, he's looking for a teacher, right? But a duty of a mentor is to guide you through the right path, tell you the things you are supposed to do and the things you are not supposed to do. You get to the point? Yes. So if you want to be accountable, like I am saying, if you want us, or if you want me to view your trades on daily basis, on weekly basis, make sure you are being honest enough. Okay, make sure you are being honest enough. Don't try to hide behind the scenes and do things anyhow. At the end of the day, it's going to go against you, not me. You get to the point. So be honest as much as possible. Be transparent. Okay, so I was not supposed to take this trade, but I did, and I lost money. So from what the lessons I've learned here is that I should always wait for my setups before I trade. Okay, so I was in this particular trade, but I was afraid it will go back to my stop loss, so I closed it manually. And right after closing, the market went straight to hit my TP. Okay, I was in the trade and the trade was going to my stop loss, and I got scared, so I closed the trade. And right after closing, the market went straight up. All right. And this is the lessons I've learned. Be transparent, and this will help shape you from who you are to who you want to become. All right. Don't just be there and try to do things anyhow, because at the end of the day, it is going to go against you and not me. You understand? So today, I'm just here waiting. Let me share this screen with you for you guys to see what I'm actually doing here today. I've been waiting here all day. Yesterday I waited, and I'm waiting today, right? Because I have not seen what I want to see before I trade. You really need to be transparent as much as possible. Okay? Yeah, be honest with yourself in the market, in the forex space. Share this up instead. So you see, this was the loss I took yesterday during live session. Oh, I think it's gone 24 hours. Yeah, yesterday I took a loss during the morning, the TikTok live. As you guys saw, I entered, I hit stop loss, which I lost $137 or so. That was it. I didn't trade again. Okay. And I've been waiting. So by end of today, after trading, I will take a screenshot of this account and share with you guys in the redemption VIP. Okay. Yes. Let's see how we are going to grow together. Okay. Yeah. So now, if you look at it, you can see for sure that the 30 minutes has respected the zone. It did not close above. Of course, the 1 hour candle is not closed yet, so anything can happen. So let's just watch out and see what is going to happen. Okay. I want to confirm. Can you guys hear the audio in the background? The audio in the background. Can you guys hear? Let me know. Oh, okay, okay, that's fine. I wish you can hear, but since you can't hear, that's okay. Guys, make sure you copy the YouTube link and share, okay? You share on your WhatsApp status everywhere. Just invite more traders or more people, join the live stream. And also, when you come, make sure you like. And if you haven't subscribed yet, you subscribe to the channel as well, okay?
good evening, good morning, good afternoon, anywhere you are in the world. Hello, it's so good to have you here. So today we are going to do our workshop. So just to remind you that if this is your first session or with us doing trading psychology session with funding tips, we have done a few of them already, and you can scroll up on this board in an announcement channel and you can find more. Now, workshops on Wednesdays are usually the extension of the Sunday topic. On Sunday, we had discussed the insight into management of emotions in trading. And we looked not only into the management, we actually looked into the theories behind emotions from the perspective of psychology and biology, and we related it to trading. We also named the 6 basic emotions that are recognized in psychology, and I have given you the knowledge of what emotions are, the impact that they have on us, and how they are actually working as a signaling process that can help us to elevate our trading game. Now, if you think about it, emotions are one of the biggest things that are stopping traders from becoming consistent traders. So yes, it is trading psychology overall. There are, belief systems, there's personality type that has an impact, and all other things. However, all of those factors, such as limiting beliefs, such as personality type, they all will have an impact on the intensity of the emotion that we are going to experience in the market. Now, emotions are usually recognized as hindrance in terms of trading performance. However, what we want to do is for you to be able to make awareness around your emotions, because the most useless thing that you can hear about trading is you should be trading without emotions. Of course, that is the end goal, and this is where we want to head to. We want to be performance focused traders rather than emotional traders. However, before we get there, we need to build in recognition, we need to build awareness, because you can only change what you are aware of. And this is what this session is about. So, as much as I have shared with you the insight into psychological theories, what the emotions are, how they relate to trading, we now are going to work through them, because, as always, we want to give you insights, we want to give you knowledge, but we also want to make it actionable for you, and we want to hold your hand through it and guide you through it, because trading is a very lonely game, and we really go through a lot as traders, and in reality, there are no shortcuts, because as much as it is about learning technicals when it comes to trading, it is within us, something within us that is stopping us from progressing. And that is because of a lot of different factors, such as societal factors, such as the way we've been brought up, how we understand the losing, what is our background, etc., etc. And we've discussed a lot of those things already. But here, I want to focus today specifically on management, recognition of your own emotion, and management of your emotions. So I want to give you actionable things that you have to do after this session that you can implement to help yourself in the market. So just as a quick recap, especially to those that were not attending the session on Sunday, but also those who were attending the session, this is just a recap of what emotions are. So in psychology, we've got 6 basic emotions that are listed here: happiness, sadness, fear, disgust, and the surprise. Now, in psychology, there are different theories, and remember, psychology is a science of human behavior. However, because humans are so unique, there will be different theories about different things. So, based on those 6 basic emotions, there are also expansions, spectrum 1, 8, etc., etc. There are also downgraded kind of packs where you get only 4 emotions, etc. However, this
Okay. Yeah, I'm using the other. I'm using the other machine. This is the main PC and this is the laptop. So I'm listening to it from the laptop and connected to an audio source. That's why you can hear. But the one I was listening to here directly there, you can't hear. But that's what I wanted you guys to hear, because it was a powerful message. But this one is an educational content from Funding Tips. So you can go to their YouTube channel. They are having so many videos there, of which you can also learn. Okay.
Your level of happiness and somebody else's level of happiness will be completely two different things. What happiness means to you means something else to another person. So this is why it is highly subjective. And because it is highly subjective, it is nobody else's job or your own to take care of your emotions and to be able to move forward and understand what it is that might be potentially holding you back. So, one of the things that I want you to remember and recognize is that emotions are signals. That signals telling you that there is something that is keep on happening or repeating itself in a market that you may not be handling in the best way. So, again, we hear so many statements that we should not be trading with emotions, and yes, that's the goal. However, at first, we need to understand exactly what is happening and why, and that's those signals. When you actually tuning into those signals, because I want to highlight one thing. A lot what may happen at times is that people will, undergo certain emotion, and then as they undergo certain emotion, they will suppress it and say, no, it didn't happen. I'm meant to be trading without those emotions. But instead, I want you to actually tune in and I want you to listen to them. Okay, I'm feeling frustrated. Okay, I'm feeling fearful. Okay, I'm feeling excited, overexcited. Okay, I'm feeling overconfident. All of those things are telling you a story about certain cycle that happens in the markets that is making you feel a certain way. When you understand why it's making you feel a certain way, you can start controlling your environment. You can start putting in management techniques. And this is what we want you to achieve through this workshop. So before we go into those management techniques and into building awareness and how to collect data, and I've got some case studies for you as well to give you kind of overall outlook on how it works. Remember that every emotion is on a spectrum. So a spectrum is a line essentially, okay? And somewhere between 0 and 100, you will experience happiness. And somewhere from 0 to 100, you will experience sadness and fear and disgust and anger and surprise. Again, those are the 6 basic emotions that we are building on, right? So all of those things are subjective, and because they are subjective, I need you to do what is needed to do. So, why is it important for us to collect that data? Why is it important for all of us to understand what our emotions mean? Again, remember, after this session, a week later, 1 month later, 3 months later, you will still see posts on social media telling you that you should be emotionless in markets. And yes, again, I'm going to repeat, that is their goal. But in order for that to become a goal, you need to understand yourself. And because it is your job, nobody can do it for you. And you have to face yourself. This is why trading is a hard job, because it requires from us to be completely raw with ourselves, really raw, and to really say to ourselves, you know what, I suck at this. I need to become better at this. And it takes a big person to be able to say that to themselves. And eventually in trading, you will come to a point that the markets will either hurt you so much that you will be forced to do it, or you will have to quit, or you actually will become tired of doing the same thing over and over again and expecting a different outcome, which is absolutely impossible. Obviously, if you think about it, it ties in with the subject of habits that we talked about before in our previous webinars, where you will be doing something on a daily basis and expecting a different outcome. So this is where we said, I've given once an example about cleaning the kitchen, and it's not about the act of cleaning the kitchen that is going to take you half an hour and then your kitchen is spotless. It's about not allowing the kitchen to get to that point, because it is a repeated version of habits that is going to get you to the same point. You need to keep trading. So traders will clean up their act after they mess up. And it's not about cleaning up the act for a short period of time. It's about implementing changes into the way they function on a daily basis. The way that you function on a daily basis is habits, and it is also understanding yourself and understanding what is ticking you over and what is not. It's also not just understanding what is wrong or what is right. And a lot of the times traders don't spend enough time understanding what they are good at. What are the advantages in markets? Because every single one of you does have those advantages. And I tell you more, 90% of you, and I'm making that statement boldly on a live stream, 90% of you could already be consistent traders that are getting paid on a regular basis. And the only reason that you are not yet is because you are allowing for your emotions to dictate the outcome of your trades in a short term. But this short term has a huge impact long term.
In the long term.
So you are allowing for your emotion to spike, which perhaps is out of your control at the moment, which is fine. This is the reason why we will build the awareness. Once that emotion spikes, this is where you allow for the action to follow up straight away. And that action is usually self-destructive. So this is where we need to understand and collect data what it is that you're struggling with. And again, nobody can do that for you. No coach, no mentor, not your friend, nobody. Not a book can teach you that. You can teach that to yourself only, because you only know how you are feeling. And you need to find out, almost like a detective, why you are feeling that way. Why is this emotion keep on repeating itself? Why am I feeling frustrated every single day in the markets? Why am I feeling fearful? What is the reason for it? What do I need to strengthen about my skill, about the way I manage my trades, about the way I manage my risk, the way I manage myself? What do I need to do in order for me to become better? Because I tell you, you will be stuck in those cycles and you will not move forward if you will not be honest with yourself. It will not happen. So we need to understand what it is that you're struggling with, because I also know that you may feel emotion, but actually sometimes you don't know why. And maybe sometimes you don't understand why you are doing things the way you are doing, and then you look back. And I understand the feeling because I've been there myself, and I understand the feeling at the end of the day when you are feeling that despair. Why did I do this? If I could only get one more chance. If I could only bring that account back to break even. If I only got another shot at this challenge. But you know what? We can have the purest intentions in our heart. We really, really can. But if we don't change behaviors, and what leads to behaviors? Emotions. So if we don't understand ourselves, we can never change. We can never do that. It is almost like, let's say you are getting a headache every single day, and you go to the doctors, and the doctors prescribe you a painkiller. But the doctor's job is not to just prescribe you the painkiller to manage your pain, but to find out why are you getting headaches every single day. Because only then you are able to minimize the exposure to blue light, to TV, to light, or whatever that might be happening. And only then you'll be able to minimize the strength of the headache and how common it happens. And it's going to be a process, because it's going to take some time to find right tablets, to find the right reason for it, whether it's your eyesight, maybe it is that you're sensitive to light, what it might be. But eventually you will get there and you will find out a way of managing it. And then those headaches will happen less frequently. They will still happen, but less frequently. And most of all, you will understand techniques of how to manage it. It's the same with your emotions. It is not about saying, I can't be feeling like this anymore. I need to deal with this. I need to, sort it out. But why and how? What is the source? What is causing you feeling the way you are feeling? Now, when we build that awareness, and the only way of building awareness
Okay, so you see that we have 8 minutes for this H1 candle to close, and we are still finding it below this resistance. Does it mean that the market is going to drop? Oh, fuck me. Sorry. We are going to see a drop all the way back to this zone, then probably some kind of corrections for us to break and go all the way here. Do you think we can have this thing today? Well, of course, that is exactly what I want to see. Okay, I want to see something like that. Since this one didn't really break like how I wanted it and it pushed here, if it is coming back to the entry, it's going to be risky. So when it comes here, we are not going to take direct entry. We will still wait until the market still gives a confirmation buy before we will buy to break this high. All right. So take note of that and don't say, oh, okay, so he has drawn his he has put his entry here. So let me put pending order. It might work, it might fail. So we have to just observe the market since the H1 is now giving us some kind of a double top. All right. Uh-huh. So we just have to be on the sidelines and wait in the game.
And the reason why most of us do it, I repeat it over and over again, not because we're selfish, because we do it for the people we love and what we can provide for them. Majority of us do want that, most of it. And then we want to obviously be in control of our time, over our finances, over the, ability to earn an amount that doesn't have a ceiling per year. We can really allow ourselves to do that, but because there is so much meaning behind trading, this is why emotions are running high. Because every single trade that you put on, and when it loses, it gives you that illusion in your brain that you are getting further away from your main goal, which is success in trading. But also remember that we said in the webinars that your brain's job is to protect you. So this is the reason why when your brain sees that you have experienced a loss in the markets, it will try to provide you with a solution. And the solution usually is scale with a bigger position, take another trade, chase the market, or remove your stop loss because we don't want to experience a loss. Those are the reasons. Okay, and this is why we learn about those things. This is why we study psychology. This is why we study how brain works. This is why we study what our limiting beliefs, because then we can inform ourselves and make better decisions in the markets. So again, awareness only exists with data collection. Now, I tell you the advantages of data collection. You may notice certain patterns. And there will be different things that will be making you feel a certain way. Okay, and I'm going to go through it, and I've got 6 steps formula for you that I'm going to share with you as well. All right. Now, somebody's trigger in the market might be, well, we discussed in our last traders roundup on Friday. Someone said an argument with their partner. Every time then they go into the market, they underperform. So they have means of managing that. Whenever that happens, do not engage in the market. Do something else or spend time back testing, because you know a pattern of an outcome. And there is a pattern of something happening, and that is going to have an impact on you in the markets. However, some traders' trigger might simply be a stop loss. Just that's it. They hate taking losses, right? And unfortunately, that is not something we can remove from trading. Because I said it before, I'm going to repeat it again. Trading is taking stop losses. Trading is taking take profits. Trading is taking break-even trades. And trading is missing opportunities. All of those 4 are trading. And obviously, we prioritize as traders take profits. That's what we want the most. But 25%, 25%, 25%, 25% makes 100%, which is trading. None of those on a hierarchy of trading are more important than the other. They all as equally important. And we need to accept, not only take profits, we need to accept losses, break-evens, and missed opportunities, because we will always miss opportunities. We will take break-evens if it is part of our risk management, of course, and or have a break-even day or week, whatever. Take profits, of course, part of trading. Stop losses, of course, part of trading. And as, for example, the trader I've given an example of said, well, every time I argue with my
please, is there not a demand zone below that level?
Solution is simple. When you argue, don't get into the market. Or
I see a strong bullish candle, which means there is a demand zone. Okay, let me show you.
It's an easy solution. Taking a stop loss.
If you watch the daily outlook, you understood the question you are asking already. You are referring to this area right here.
What triggers us? Do we risk?
Are you not referring to this area?
The right amount. When does it happen? Specific time in a day, or is it just random? How does it make us feel? What is the emotion? And I tell you what, it's ego very often attached to
his arrival. Are you not referring to that particular area which I have drawn now?
Are the people who might be teaching other people, who might be mentors, coaches, etc., because they feel like they've got an image to live up to. So every time they take a loss, they're like, oh my God, they're going to judge me, etc., etc. So there are a lot of attachments to it. Can you remove it? No, it's not something that can be removed, such as argument or such as, let's say somebody feels anxious during news events. Don't trade during news events. Someone may notice they don't perform well on Fridays.
Okay, so 9 o'clock.
There are really some easy solutions, but that is not. And the only thing that you can do is to learn how.
The new H1 candle has opened, and look at what happened. Since the 2 hours candle couldn't break. Let me turn to 2-hour time frame and let's see something here.
So we've got 6 steps here, right?
For 2 hours. Okay, 2 hours. This one is yet to close. But look at that, the zone. This zone is quite stronger. Okay, so for the market to break, it's going to be a bit difficult. But of course, we need a breakout before we can continue on buying, or we will wait and buy again. I'm not interested in selling. Okay, I'm not really interested in selling, so I will wait and buy instead.
As the emotion comes up, okay, and genuinely, I would want you to either. So I'm gonna add this to our Notion, and I'm gonna reshare the link to Notion. I will share as a worksheet as well on a Word document, so you can have that. And you can either use it as a template, and then you actually put a pen to paper, or you can actually, type it on your computer, whatever. Now, first of all, you need to choose here because, again, it is highly subjective in the way you want to manage yourself, all right? So, first of all, journal the emotion. So, either as the emotion comes up, so you catch it, so you're like, oh, I'm feeling angry. Why am I feeling angry? I'm getting frustrated. And I tell you one thing before I continue, because I just love, what we do at Funding Tips, because we are all traders. We all understand what the traders are going through. And that's exactly what I do. When I am trading and something, today, I've got an example for you. My trading panel did not, so it messed up my position essentially. Long story short, that's it. I wanted to sell and it put me into a buy and I didn't notice because I clicked the wrong button. That's it. I clicked the wrong button and then price dropped down about 60 pips. Fine. Now, what did I feel? Did I feel good about it? No. I felt angry. I felt frustrated. I was like, well, I really don't need this, especially that my trade before was a loss. So this would have been perfect. It would have taking me out of the loss and giving me some. But that didn't happen. So this is where spiral happens. There is a trigger, something that is sometimes out of your control, just a human error, and then that's it. This is where the accounts get blown. This is where chase happens. Instead, I myself have a trading partner that we talk to each other every single day.
That's taking you eternity to reply. No worries. All right. So yes, it's a demand, but that demand, most of the times, the market violates it. These kinds of demand, the market violates it. Why does it violate? Because there is another one below it. All right. So mostly the market violates this one and goes straight to activate this one. So if this trade, if the market decides to drop all the way and break this particular zone, buying from here is going to be risky, even though you can try. All right. But it will be much safer to buy from this end rather to the upside. All right. Yeah. Buying from this area is, I would say, a high risk. Here is a high risk buy for me. But of course, the market decides what it does.
You know, sometimes that's all you need. But I needed to talk to someone because I was like, you know, when you feel like markets are,
I hope you understand.
The markets are just markets, they're doing their thing. But your feelings still happen, your emotions.
So we should wait for your signal to buy. If you have your own signal buy, just go ahead. I'm just waiting for my buy confirmations. All right. But yes, if you wish to wait for me, you can wait for me. But if you have gotten your own signal or your own confirmations, you can go ahead and buy. All you need is your stop loss, your take profits. Then you allow the market to decide whether you are right or you are wrong. You understand? Yeah, but of course, once I get an opportunity, I'll share with you guys.
Not fulfill the trading potential because your emotional decisions in the market are not representative of your trading skill. They are representative of your lack of control of your emotions. So whatever you do during those periods when you go on a tilt, when the emotions are running high, when you apply self-destructive behavior, nothing to do with your trading skill. Everything to do with your psychology and your lack of awareness about what is happening and your lack of method to how to manage yourself.
So now we just have two things to do. Either we wait to see a breakout to the upside and then we buy at the pullback, or we wait for a pullback to this area here and we buy. Okay, this is what I'm waiting for to see today. Either we break this level, pull back, and we buy to the next zone, or we wait for the market to drop, then we take a buy from below and take it to the upside. These are the two scenarios I'm expecting to see today.
5 times today, I felt anger coming up. 5 times. And then it's obvious anger is something that is struggling. So then when you go to somebody like myself, trading psychology coach, or your mentor, trading mentor, another coach, or whoever, or even your friend for advice, you can actually name what you are struggling with and say, all right, this is what I'm struggling with, and I need to work it out. And that is what I'm going to try and do to manage myself. So do that. Make a note of significant market event that you react to emotionally. What did you react to emotionally? So the emotion is, let's say, fear. Fear, because our first case study is about fear. My emotion is fear. Okay, what caused it? London Open. The spike during London Open usually takes me out and I just feel so frustrated. Okay, now what is the pattern? Okay, so you can review that and then say to yourself, all right, okay, so when does it happen? Okay, London Open. So it's an easy solution. Don't trade during London Open. So what I mean is you can trade a London session, but do not place the first trade till 8:30 in the morning. So 8 a.m. London session happens. During 8 to 8:30, the spike happens, the whipsaw, where usually Asia's session or Asia's lows are taken out. There is a whipsaw of stop losses, and then the market sets the direction. So do not keep on repeating. Keep on repeating it. Stop putting yourself in an environment.
The new big AI that everybody wants to get, cloud-based platform that is used for every self-driving car in the world.
Recognize that this is the environment that is triggering you, and you keep on exposing yourself to that environment.
Okay.
Then you are starting your day on the back foot, and all you have to do is remove that part of your day and actually start fresh-headed. The whipsaw's not happening. I know what is going on, and you enter the market. And then even if you win or lose, it doesn't matter because you're like, right, I've given myself the best chance here without having to be taken in or out of the market. Now, scale the intensity. This is important. I want you to understand the intensity of the emotion that you have experienced. Remember, I said that emotion is a spectrum. So I want you to think about it. What did you feel like, 1 to 10? Like, sometimes you might be, the anger, it will be like a boiling water and you'll be like, it's 10 out of 10. And that might be caused by a different event. So let's say London Open causes you anger or frustration at around 4 or 5. But there might be a certain event in a market or something like, let's say you set your trade to break even, it hits your break even and it shoots to your take profit. That anger and that type of frustration might be 10 out of 10. So then obviously, then you'll be able to, thanks to that, you'll be able to identify triggers. All right, this specific thing, break even, before I go into my direction, triggers me 10 out of 10. So what do we have to do? All right, well, maybe I need to remove break even out of my risk management techniques. Why do I go break even? Is it necessary? Is it not? Or actually, then you have to accept that this is what's going to happen. However, any decision that you make in the market should be data supported decision. So data informed decision, in other words. So you should actually look at the series of your trades over the past month, for example, just as an example, and then say to yourself, well, do you know what? Majority of the trades that hit break even actually did take my profit. So really, if you ask me, well, what do I do to become better? I'll be like, remove break even. Clearly, you are overprotective of your capital. You are fearful.
Okay. So
instead, allow for the numbers to play, allow for the price to breathe, and your data is showing you that actually, if you keep your trades open, you are likely to take profit from the market. However, if we notice, actually those break-evens protect you from taking a loss, you just have to accept it. Again, dig in, understand what is happening, why is it happening. It's going to give you so much psychological ease. It's unbelievable. Then obviously trigger identification, which we already discussed. So, when it's happening and what. So, was it that the market just turned on you, or, what was the trigger? Was it a stop loss? Was it unexpected news? But if it's unexpected news or events that happen in the world, there is zero control we have over that. But really, by identifying the trigger, again, you can prepare better for the market. So again, like London Open example, you are prepared. You're like, all right, usually there's a whipsaw. I'm gonna wait, and then I'm gonna position myself to take that trade. Oh, okay, this is what usually happens during New York Open. I'm gonna be careful here, and this is what I'm going to do. Okay, you are positioning yourself with logic and strategy. All right, because it's not just about the strategy in the market, that you see a pattern for your entry. It's understanding what is happening, how is it happening, what impact it has on you, because that way you are able to identify your strengths and weaknesses. And it's not just about identifying the weaknesses, because your weaknesses can turn into your strengths if you understand what is happening. And when you understand what is happening and you can turn it into a strength, then you are winning, you're a winner. and it's not about taking profits. It's about you managing situations that you are in, and then positioning yourself in a profitable way, because that's where the profitability starts. It doesn't start at you taking profit. Profitability starts at the way you approach the market, the way you approach yourself, the way you position yourself in the market, the way you analyze things, the way you kind of understand your emotions, your personality. That's where your profitability starts. The end part of you taking profit and being a consistent trader is the end product. It's the sweet juice of your hard work of actually doing all other things, because trading is not just about clicking buy or sell button. That is the end product where everything is done and like boom, this is what I'm doing, this is how I'm doing it, this is how I'm managing that trade. Yes, and obviously things may happen that may make you feel a certain way. We know that is the ideal scenario, but all the work is before, during, and after. It's not just clicking the button. That is not trading. That is just a behavior that is attached to trading, right? Feedback. That feedback should come from yourself. Get yourself a trading buddy. From your trading buddy, get yourself a mentor. Get yourself a coach. Get yourself a community. Get yourself people. Like, we live in an era where we get to connect with people from around the world. We are in such great position. We've got firms like funding pips, we've got coaches like me. We all giving you the whole lot. And you've got
I will wait for you. I am still learning. Okay. All right, that's fine. So keep waiting. Once the road is clear, I'll tell everybody, then we go in. All right. Just wait, relax, and wait.
To kind of reflect on something, and like today I was talking with my trading buddy, and obviously, like, sometimes you're self-critical, and then you can be like, oh, I should have done this, and that. And he opened it up for me, and he's like, actually, you need to realize now everything you've done was correct, and this was out of your control. And I was like, yeah, you're right. Why am I even stressing over this? So just so simple. And then reflection and analysis. So after you journaled your emotion, okay, I'm feeling fearful, and the intensity of it was 10. And that it was because the whipsaw during the New York Open and London Open. All right, I understand the pattern. I understand also now during the reflection and analysis part what I need to do. So I need to understand the patterns after each. So I need to understand what happens each day. All right, because that's important. There are different types of analysis I need you to do. Each day I need you to reflect, and I need you to look at your worksheet and I kind of be like, all right, felt fear during this period, during that period, this is what I've learned from it. All right, I've learned that during London session, it's something that is happening. Now, how do you know? Because it happened for the past 2 weeks. As I've been collecting that data, I've been feeling a certain way, and there is a certain behavior or certain situation I keep on exposing myself to, and it's not happening. Or another one might be that you actually don't check news event calendar properly, and all of a sudden news comes up, and it takes you out, and you're like, this keep on happening and keep on being taken out. Then because of volatility, like it's through my stop loss and this and the other. You need to prepare. So you need to really reflect and analyze and understand what are the emotional patterns, what are the trigger patterns, any specific market events, any specific sessions, any specific strong emotion. Is there a correlation between what is happening in terms of, let's say, at the moment, what we recognize is the London session whipsaw is kind of triggering you, and then you're feeling the emotion. After you feel that emotion, you feel extremely angry, and then the trade actually goes in your direction, or according to your analysis, then you start doubting yourself because you're already feeling fearful based on what happens in the morning. Then you don't enter that trade, and because you don't enter that trade and then it continues going in your direction, your frustration and anger is growing, and then eventually you take a silly trade that is outside of your trading plan and you just start burning through your account. Whereas if you remove that first piece of the puzzle, that first step that spirals like a domino effect into catastrophe after catastrophe, and you just have to recognize, okay,
so look at what is happening.
that is actually
can see that the market is pushing down now. But like I said, I'm not interested in the sell, so I will still wait. Okay.
And that is going to help you to make better decisions, because obviously your emotional state is going to have impact on not very wise decisions in the market. So then also when you are feeling an emotion, what do you do after? What do you do in between? You feel the emotion and your next trading decision. How are you going to manage yourself? Because that is also very extremely important about what you are going to do. And you need to use this as a reflection to adjust either your strategy, or not your strategy, but risk management, or your entry criteria, or the time that you trade, the day that you trade, and implement those management techniques. However, number 6 is the most important, is the decision. So after you've recognized all of that and you reflected and you analyzed yourself and you're like, all right, this is what's happening, this is that, what is the decision? You've learned, okay, you recognize, you reflected. What is the decision into tomorrow? Because you'll have to make different degree of decisions. First of all, you'll have to make daily decisions. What have you learned today that you're going to take into tomorrow? And this is serious. I'm not saying just for you to say, okay, what have I learned today? Okay, this, and for you to tomorrow to do the same. No, I need you to think, okay, this is what happened today, and this is what I need to do tomorrow, and this is how I'm going to implement it. I'm going to make a change in terms of what time I get up. Maybe I don't prepare. I give myself too little time between me entering the trade and analyzing the market. So I need to maybe wake up 15 minutes earlier and maybe have my coffee first. You know, you have to think, and you need to think, okay, those are the changes I'm going to implement. This is my decision. This is what I learned from it. Those are the things that I'm going to do differently. And listen, it's going to be a trial and error. It's not going to be that you're going to make one decision and everything's going to be okay. It's a journey, continuous journey. Yeah, and I'm telling you, and supposedly who you may perceive as a psychology coach with over a decade of experience in psychology, 5 years experience in the markets, but I still work on myself every single day, and there are days that I struggle. And I, interestingly, spoke to a hedge fund manager, ex-hedge fund manager. He worked in a hedge fund for 30 years for banks, this and the other. And now he trades for himself. And I asked him, does it get any easier? He said, no. That was his answer. It was straightforward answer. We had so many interesting conversations. And answer to this question was no. Yeah, he does. Like, you know, there are things he doesn't stress over that he used to stress over before, etc., etc. But instead, it's a continuous game of self-improvement and into looking into things, because the thing is about trading, it can just easily become a human error. But this is why we train ourselves on the charts, or back testing, forward testing, understanding ourselves, so we can remove ourselves from certain things. I know for a fact, if I had a bad night's sleep, I can still analyze and enter a trade, but my decision making becomes impaired. I know that about myself. Okay? I know it. It's been hard for me to make a decision. Do I take profit, or do I run it? What do I do? I genuinely struggle to make decisions. And that is such a common pattern. So then I know that there is 2 things that I can do. Right? 2, if I feel like, well, actually I can trade, the market conditions are really good, I make a plan before I enter. And I already know when price gets to this point, I'm closing my trade, or I'm going break even, or I'm trading, or taking partials. Like, I make a decision ahead of time, so that I'm not faced with that emotion, with that situation, because I know I won't be able to handle it. But what does that take? Insight into yourself, understanding yourself. It's almost like understanding somebody else and being able to tell them, this is how you do things, this is how you not do things. And decisions will be needed. You will be making a decision about the next day, but then also I want you to reflect at the end of a week and be like, all right, this week I was acting out of fear because I got some profit on my challenge account. I got into, 5% profit, and now I'm feeling so fearful of losing it. I literally missed every single setup. And that could be a reflection on the whole week and say, I did the same thing. Look on my notes. It says I felt like that on Tuesday, on Wednesday, and on Friday because Thursday I didn't trade. Okay, so what was happening? Why is it happening? What is the plan? What is the decision? What are you going to do with this information? Because you have to do something. Because otherwise, next week you're going to feel the same and the same, the same and the same and the same. Because look, we here long term. None of us think about this career. All right, I'm going to wrap it up in a month and that's how we go. No, majority of us, I know for a fact, we are here for as long as we see as a long-term career. So it's about time we implement things to do those necessary things that we need to do. So decision is necessary. All right. Now, let me, all of this, by the way, I will share with you as a worksheet. So the 6-step formula will be shared with you as a Word document. I'm not going to overcomplicate it with Notion. Not everybody uses Notion. Not necessary. I will just send it to you as a worksheet, and then you can either implement it into your Notion. You can create yourself a journal on Word or any other platform that you wish, or you can just print it out and actually put a pen to paper. Like you've got it in front of you, you've got the key questions there, and that's what you can do. I also would recommend rewatching it as well, because that also gives a better insight. But now I want to go through 3 case studies. Okay, and let me read out number 1 for you. So, John, all the names, by the way, are made up. All the names are made up, so don't connect it to anybody. John, a forex trader observed a sudden drop in Euro USD pair due to unexpected news regarding the Eurozone's economy. The predominant emotion he felt was fear. Worried about escalating losses, he quickly exited his long position. In his journal, he later wrote that fear had caused him to act hastily, especially since the currency pair just spiked into his drawdown and then moved to his take profit target. All right, so now John has to scale the emotional intensity. So he rated his fear 9 out of 10 because during news events, markets can be very, very volatile. Trigger identification, the sudden news about the Eurozone economy. Now, was it sudden or was it actually built into the economic calendar and John just didn't check it, and did not prepare for what is about to happen? Feedback. So let's say John has a buddy that he talks to and he's discussing it with his friend, and the friend says that they kept their long position. Reflection and analysis. Well, John frequently noticed that immediate market movements and reactions, so not necessarily during news, just immediate movements, has made him anxious. So recognizing this pattern, he decided to confront it and try to understand how he can minimize that fear by not exposing himself to those things. So on that occasion, John was trading Euro USD, but John may also be trading gold, and gold can be very, very volatile, or GJ for that matter. So if John feels fearful due to sudden market jumps and spikes, he should probably move himself into cross pairs that are more calming behavior, because every single pair acts differently. There is a different behavior behind it, and it's important to understand it and to be able to move with it. Personally, I like Euro USD because there's enough volume in it, but it's not so spiky, so I feel like, all right, it's good for me. Whereas there are other pairs that I could not trade potentially. And why? Because it's psychological, and I don't want to. Why would I expose myself to extra stress if I don't need to? This is how simple I keep in my trading. If I don't need to feel stressed, why would I? I'm not going to. So what can John do? So John can analyze his journal, and he can kind of stay consistent with checking economical events that, are causing his fear, and he needs to kind of note and understand, okay, should I keep my positions open during news events? If that makes me feel anxious, maybe I should be closing my positions. Maybe I should not be trading at all during those days, because sometimes when we have big news coming into the market, the price may not be acting right all day. So he has to recognize that, or is it just an hour before the news? That might be something that might be happening and making him feel uneasy. He needs to recognize those things about himself and what he is going to do in that situation. Could he trade after the news, so after markets stabilize themselves and the data kicks in properly and he sees the direction he could do it? Or would that be something that would trigger him more, especially if the price is going to go in his direction? And maybe he should just wrap it up and kind of move on with his day and move into the next day. Those are the questions you need to be asking yourself about different situations in trading, because by asking yourself those things, you will be able to understand yourself better and understand what are you going to do in each situation. Like for myself, if I was in a trade already, and let's say I'm an intraday trader, by the way, but if for whatever reason I was in a position from weekly high and I'm holding it, and the price is clearly 50 pips or 60 or 70 away from my stop loss or my break even, I'm not going to be so worried about it. Mostly it depends on time for moves. If it's just any red folder, that's absolutely fine. But if it's rate decision, or if it's something to do with, I don't know, like we've gone on farm payroll tomorrow, I'm definitely not going to hold it. I'm going to get out, and I'm not going to put myself through that stress. Anything that causes me stress, I'm like, no, thank you. I'm not doing it. And that's exactly what you need to think about, because sometimes you are putting yourself in self-sabotaging situations, and it's not really about you and about your skill, but it's the situation you keep putting yourself in. So you also need to recognize that, and this is why it's so important to understand the triggers. Okay? Now let's go to case study 2. And by the way, those examples are based on the 6 basic emotions, and of course, those are only 6 basic emotions as a theory.
I'm interested.
And other emotions that we experience that are attached to it. So just to highlight that. Okay, study number 2, happiness. Lisa was trading the GJ pair and noticed it breaking out of a long consolidation pattern. The technical indicators she relied on all signaled a strong buy, so she felt happy, i.e., excited over the clarity and potential profit, and she immediately increased her position. And I know this is something that a lot of people do. So she rated her happiness, therefore excitement. I'm fine, and I've been waiting for this setup for 5 hours or for a day. It's finally breaking out. So why don't I add a position? Why don't I do double risk? Why don't I, all of those things finally, yes, I'm right. Look, it's going my direction. 8 out of 10. She said 8 out of 10. So what was the trigger? The breakout from consolidation pattern triggered her happiness. So she was there anticipating, staring, and essentially what it goes down to is her being right and price going in her direction. All right, so then obviously we can collect feedback from your coach, from your mentor, from your friend, from your trading buddy, and for example, Lisa's friend has decided not to be impulsive on the first breakout, and they have decided to put a roll in to adjust the position size, or they can advise Lisa as well to adjust her position size and not to actually go for it at the first sight of feeling excited about a trade. So that is what emotional trading is, right? So then the reflection, looking back, Lisa noticed that her trading behavior became impulsive after experiencing winning streaks. And the overconfidence is driven by her happiness, which then makes her more risky. And then eventually she loses all of her profits after those winning streaks. So what is the solution? So implement stricter.
Well, let me leave this shit market and go do what I want to do, because looks like the market is not ready to go anywhere at the moment. So we are waiting to see a pullback, and then we buy, or a breakout pullback, we buy. These are the only 2 options. There is no other option left for me. So either it breaks, respect, we come back for a pullback, then we buy. Or so if it breaks out this level, this is where it will go and come back for us to buy. So once it breaks out, it will go to 3400, 3402, then drops back to the 3380. So when it comes back to 3380, then we are going to buy from 3380 all the way to 3428. Okay. So these are the scenarios we are going to expect.
Like, how are you going to feel that after, it takes loss? I usually just do a loss. It takes loss. Because, listen, if I'm going to ask myself, how will you feel if it takes profit? Obviously, I'm not going to feel bad about it, But I ask myself, how will you feel if it takes loss? And then I'm like, well, I'm not going to feel too good. I think you could trigger me. Then I'm like, you're done. But if I'm like, it's fine, like this is such a strong and good setup, I'm happy to take the loss, then I know I've made my decision and it's fine, So this is also where Lisa could perhaps think about, clearing her mindset and reviewing her trades, like wins and losses at the end of each week, and grounding herself with a grounding exercise. Because it's true, and a lot of people will tell you that after a series of winning streaks, you may start feeling you have that God syndrome. Oh my God, look at me, I'm on a hot streak. And those streaks will happen, same as losing streaks will happen. But this is where we need to stay like just neutral, and by staying neutral is by recognizing those things first, because once you recognize those things first, then you can implement techniques, and then slowly but surely you will start getting neutral, Now, what could she also do here is it's all about risk management, and think about how should she position herself in the market, and kind of decisions make. So that one's done. Let's go into case study 3, surprise. Now, look, surprise, it sounds so silly, but I'm just basing it around the 6 basic emotions. It could be surprise in the market is not uncommon. We are surprised quite a lot, I would say. So anyway, Rachel, while trading the USD CAD pair, observed that the currency pair has been stagnant for several days, moving sideways without any clear direction. After a series of small losses due to whipsaw nature of the market, she felt a sense of surprise. Could also be frustration, I don't know. This emotion made a question the value of the current strategy, and she momentarily considered switching to a new trading approach on the spot. So listen, this is such a great comparison to the case study 2. Case study 2 was caused by a winning streak and overconfidence. This one is caused by a losing streak and losing the confidence. What can happen is you need to have the expectancy in terms of how your trading edge works. So even if you are undergoing a winning streak, you have to understand certain numbers and say, all right, my longest winning streak is usually 5, so I need to be prepared. How am I going to act when a loss happens?
It's connect Wi-Fi if you have a box. I don't have problem.
Same with losing streaks, so you kind of prepare.
You should avoid watching those shits, listening to those shit things.
Or whatever. And I don't know what the numbers are. The losses are fine within the means of the numbers in my strategy. And when you have that understanding, you will not be switching around so much. So obviously, emotional intensity scale, how she said, okay, I'm feeling a bit surprised, caught off guard here, and I'm feeling 6 out of 10. And then the trigger is the repeated minor losses, and the unclear direction of the market. Stay away from consolidation markets, expand on your currency pairs or what you are trading. Number 2 is, again, gain that insight into your numbers, and the reflection is that essentially those are the numbers of the strategy, and it's losing streak, it does not decrease the effectiveness of the strategy. It's still effective, but you're just going through a losing streak, So it is about refining perhaps the approach, back testing, more forward testing, reviewing the markets, gaining that confidence, and then moving forward. So now, what is the potential solution? Another solution for Rachel is that she could refine the strategy. Now, I want to highlight that again. Let's say you are trading a strategy that focuses on 1 minute entries, and it's so popular on social media, and people taking 1 to 10s or whatever. Now, sometimes in order to take a 1 to 10, what people will not tell you, because people tend to not share their losses on social media, is that before you get your 1 to 10, you may take 5 losses in a row. Okay, so then you have to think to yourself: am I emotionally equipped to take 5 losses in a row before I hit that big trade? Some people will be like, yeah, I don't care, that's fine. But some people will be like, no, that is actually triggering me. And it's like, remember that domino effect that will spiral me out of control into other things. So you need to understand that about yourself. So only because statistically a strategy is profitable, it does not mean that it may work for you. You have to then think, okay, does that suit me? Those patterns that we are seeing here, like, I know for myself that I'd rather to have small consistent wins rather than hoping for that big run. No, I wouldn't have to hope if it's database, or it doesn't help me psychologically to perform. I'd rather to come into the market, do my job and move on, because I've got other things that I am doing. So you have to understand that as well. Okay, now I want to highlight here, this is an image from the last session as well. I want to highlight here that is one of my favorite examples, so I just need to say it again, but it is all about managing emotions. And this is in life and in trading as well, because the glass, nope, the glass represents us. Okay, this is us. This is it. And this is where trading is, this is where life is, this is where our work life is, this is where our children are, this is where family members are, and just unexpected life events. All that water that is pouring into us is just life. And it can be filled with stress, it can sometimes be even filled with trauma, it can be filled with minor stresses. There's a lot going on. And we are filling up all of this. So we need to find a way of releasing that by implementing a tap that can release that water from the glass, and release that water from the glass, and release that water from the glass. So because sometimes the stresses from life will not stop, they will keep on coming your way. So that is more of a reason why you need to find a way of releasing the water from the glass, because if you don't, eventually it will get full. And once it gets full, it will then take one drop to fall down and for something minor to happen, and that may spiral you out of control in the markets, in life, and in the way you're managing things. So you don't want that. It's all about prevention, and this is what I am so passionate about, just generally in psychology, managing yourself on a daily basis based on knowledge about yourself, based on what works and what doesn't work for you, before you get to that tipping point, before you experience any type of intense emotions long term that might be chronic. So that's why all of those things are important. And the management techniques we have talked about in our last sessions and the sessions before, and there are a lot of things that you can do. But most importantly, you need to find something that works for you, because again, as individual are your emotions, that's how individual are going to be your management techniques, based on the intensity of the emotions that you experience and type of emotions. But remember that it is all manageable. You have control. You have more control than you can imagine. You think you don't, but you do. You do. All you have to do is switch on your awareness to put yourself in a position to take that control. And it's hard work. It's not easy, but that's all right. We're going to guide you through it, and we're going to help you through it. And this is why these sessions exist, because we want you to do well. We want you to progress. We want you to grow. And those are the actionable things that you can implement yourself. And I tell you one thing, you've got it all in hand. You've got the capital at hand. You've got trading coach, trading psychology coach at hand, not only with knowledge and insight, but with tools that are given to you and explained. And really now, it's on you. And you can do it. You can do it. And even if you think, I've not achieved yet what I wanted to achieve, and it's coming to end of the year, you would be surprised how much can be achieved within a month focused work. I'm not saying expect riches and reach millions, but it's about progress. It's about becoming better every single day by 1%. And you can do it. And what you have to do the most in order for you to succeed as a trader is to look inside, because you are searching for all of those answers externally, and trust me, everything you need is already within you. So, guys, thank you so much for being here. Thank you so much for attending this session. And it's time for you to ask me questions. It's time for you to make comments. It's time for you to tell me whatever you want to tell me after this session. And I'm here to help you. Now, one thing I want to highlight is that on Friday on Discord, we've got our Traders Roundup, and those sessions are there to see how your week has been, to help you reflect, to listen to you, to give you advice and some tips, and then to prepare you for Monday. So remember about Traders Roundup that are happening on Friday. And in the meantime, please give me any questions that you may have. Is there going to be a PDF for this lecture? So it won't be a PDF. Well, Word document or PDF. So essentially, I'm going to create a worksheet based on the 6 steps that I presented to you, and you will be able to implement that in terms of the 6 steps to reflecting, collecting data on your emotions, reflecting,
Okay, Matthias, yeah.
and then making further decisions.
Matideye.
So then, I can see that a lot of chat has happened.
Right.
Let's see what is going on here. So I can see currently feeling fearful and anger plus regret. Now, after losing 4% of my account, in which, when the right opportunity comes, I couldn't get into, perhaps it is about reducing your risk and understanding the power of compound and how little by little you can come out of it, understanding your data. And look, you don't have really much control about what is going to happen in the markets, but you have control over your execution and you have control over yourself, you know, and we are offering you tools to gain that control over yourself. Let's see what's next. You're always amazing, Paulina. Well done. Well, you're very welcome. I'm extremely pleased for the positive feedback. Journal the emotion after loss is extremely hard for me, though still working on it. Well, I tell you one thing, you can change it from tomorrow, and genuinely, it is hard, but in order to succeed in trading, you need to do hard things. You've got no choice but to do it. Genuinely. Like, the knowledge is there, the insight is there, the tools are there. Now what you have to do is implement it. And you can. You just have to make yourself do it. We've got another one. Just sort of something if people don't have an accountability, but they all have a hard time writing. Maybe they can express their emotions by talking about it and recorded it on their phone. Absolutely, that is such a great idea. Recording yourself or talking to your phone in terms of creating a voice note for yourself, or in a note, just writing. So it's essentially like journaling, you know, and writing or recording. Absolutely brilliant. So I have some traders that sometimes struggle to actually journal things because journaling can be very tedious. So what they have implemented is to record themselves on the Zoom reviewing the charts, and that was their journal. There are so many creative ways of doing it, you know, and like it can be so helpful. Like it's necessary to do it, but I think that idea is absolutely brilliant. Such a great lecture. All right, fantastic. Well, guys, thank you so much for being here. As always, it has been my pleasure. So on Friday, we've got Traders Roundup at 7 p.m. Okay, it's going to happen on Discord, and this is where we're going to just kind of chat. I love it because you guys chat between each other, and we can kind of reflect and then move forward onto Monday. And then on Sunday, as always, there's going to be a webinar at 6 p.m. UK time, and I'm going to open up a new topic for you. And then again, on Wednesday, we are going to put it into action essentially. So thank you so much. It's been my absolute pleasure. Speak soon and have a fantastic evening. Take care. Bye bye. Hi, I'm so pleased to be here again and to host yet another webinar with funding tips together for you traders. So today's topic is a very comprehensive topic and topic that needs to be talked about a lot more because one of the reasons why we do not fulfill our potential as traders is because there are certain limiting beliefs and beliefs about ourselves that are stopping us from reaching our full potential. And all of those beliefs are built on life experiences, what we have experienced, and we're going to really dive into it. But not all of them are true. And those things are holding us back because of certain ideas that we hold about what a success might be or what we are able to achieve or not. But actually, because they hold us in that place, we are unable to move. So I've got actually, like a little analogy for you and why we need to work on our limiting beliefs. And if you look at the video now instead of the slides, I want you to think about that this is you and those are your limiting beliefs. And this is where I've got two bands here, right? And each limiting belief will represent one band. Okay, so I've got two, but there could be five, there could be one, there could be 10. And the more there are, there is a more resistance of you reaching the heights that you want to achieve in terms of your success. So if you remove one limiting belief, yeah, maybe you will not yet achieve the heights that you want. But as you can see, we've removed one and you can move further up. We want to work for you to recognize your limiting beliefs and allow yourself to free yourself from them so that you can freely move from where you are and where you want to be and not allow for the limiting beliefs to crush you. Because even if we progress and we have those limiting beliefs in our minds or in the way that we perceive ourselves and our success and how we perceive what we can achieve, we will be eventually stopped because there's only a certain level that we can get to. And then once we remove that belief, this is where we truly grow. So maybe sometimes and at times you still are able to achieve success even with limiting beliefs still being in your demeanor and your persona. But because you removed a few, you will be able to move actually forward. But the truest potential is where you are free in your mind, because it all starts in our minds. And you know the saying that says the sky is not the limit? I want to twist it. The saying is the sky is not the limit, your mind is. Because genuinely, if you believe that you have hit the ceiling and there is no more growth for you, this is where you will stop. But if you believe there is more growth, despite the success, that you can achieve the abundance, the things that you want to get to, then you will. And you know, there are certain people that may have extraordinary ideas, and I know a few. And one of them could be Elon Musk, right? He wants to fly to the Mars. And to a person, ordinary person, this may sound just completely insane. What is he even talking about? Well, he decided, and he's working on it relentlessly. And not only has he developed Tesla, and sales of Tesla are fulfilling his dream of going to the Mars. Now, that's an extreme example, but there are a lot of different examples that are people dreaming about the amount of money they can achieve, about the success they can achieve, the companies that they can build, the things that can do in terms of humanitarian kind of things, the charities they can build, the foundations they can build, what they can do for their families, that they can pay for everybody to go for vacation, etc., etc. Whatever you decide, you can get there. Whatever you decide and say, I cannot get there, you will not get there. So it is a really extremely important topic, and that topic will require from you extreme honesty. You will have to be honest in terms of yourself, and you will have to really go in terms of your self-perception, your persona, your demeanor, and understand what are the lacks, what are the things that are potentially stopping you, okay? And really, really going deep into getting to know yourself. Because when it comes to certain limiting beliefs, people are not aware of what actually might be impacting them. So limiting beliefs are in line with the topic that we already discussed. Everything that we discussed interconnects with one another. The whole psychology topic connects with one another. You know, it is all about human behavior, human psychology, thought processes, emotions. Everything is interconnected with our behaviors, choices, how we perceive things, how we build things, how we think we can, we cannot, how we interact with the world, how we interpret the world, and based on those interpretations, how we make our decisions. So when we discussed habits in the last webinar and in the last workshop, one of the key things that we said was that you need to become and identify as the person of success, and it has to become your identity in order for you to proceed. And this topic is going to empower that identity for you, because if at the moment you want to get that funded account with funding pips, or you want to get your first payout or fifth payout, or you want to grow and scale your account, you can only do that by believing in this. Nobody else, the truth is, the harsh truth, nobody's going to believe in us in life more than we will believe in ourselves. We have that illusion that we want people to believe in us. But really, the true healthy relationship that we should be seeking in our lives is the relationship with ourselves. And we should be celebrating ourselves and believing in ourselves more than anyone in this world. We should have those ideas and say, I'm going to say that I'm going to do this and I will do this. By what? By actions. By believing that you can achieve it, but also you will follow it up by actions. Because one thing that is important that we have learned so far, your actions, your intentions, your words, it all has to match up together. One cannot go without the other. You can't complete actions without having a plan. You can't have a plan without having an idea and believe. It all has to come together. So all of this, it's kind of, marrying up together. And what we are going to do is we are going to help you to restore your core beliefs and ingrain it in your thought processes. And we are going to stop yourself from constraining your own potential. Okay, so let's understand limiting beliefs. So as always, the way we run those webinars, we are going into the topic deep to understand and make ourselves aware. What does it actually mean? What is it? Once we build that awareness, we can translate it into our limiting beliefs, into how we function as traders. And then finally, we can implement it into action. So we are opening up the knowledge, we are integrating knowledge into trading, and then we are putting things into action and creating the momentum in our favor. So limiting beliefs are essentially mental barriers that are holding you back from certain actions. So even when those actions are not in your best interest, you will still continue doing certain things. So these beliefs often stem from past experiences, from societal conditioning, from negative reinforcement, from negative experience. It will depend on the country you are born in. It will depend on the culture you are born into. It will depend on the religion you're born into. It will depend on a more deeper level how your parents were brought up, how your parents' were brought up, and it's all about the perception and how things are perceived.
All right, so a new candle has been opened, and you can see that nicely each one candle has closed above. So if it pulls back to a certain level, you can actually take a buy right there. And you can also see that 30-minute time frame also gave a nice bullish engulfing. All right, closing above the previous high right here. So this is an opportunity for you to actually go into the markets and buy.
Look how I've been traders, 10 years experience already, 15 years experience already, 25. And I am just starting. I'm only 3 years in. Okay? Profitable traders must have some secret strategy that I don't know about. And I see it all the time. And purposefully, today or anytime, I sometimes remind traders, I drop a little hint on Twitter and I say,
so I would love it the market to come to
funded with 5-second strategy. Do you know how many clicks I get? But the next tweet says
80, yeah, exactly 80. Then we can take a buy from there, or even 79. So 79.80, you can risk a buy, and your stop loss right below here. All right, but a good buy is whereby you wait for this market to go to somewhere 0.3 and pulls back to the 80, then you get a nice and sweet buy from there. You understand?
It has to come not just from your heart and your intentions that you want to achieve something, but from the deep work, focused work that you are going to do up here. Because everything starts up here. You may have brilliant ideas, the most amazing ideas, the ideas that could potentially change this world. Not just in trading, I mean, maybe in terms of health, maybe in terms of curing cancer, maybe in terms of all the things that can be done for our society. But if you don't have that belief and confidence that you can achieve it, and then if you are not going to make that first step towards it, it is never going to come into life. But remember, everything we see in this world, everything, once was just an idea. An electric car was just an idea. Electricity, there was a world without electricity. Never mind internet, never mind smartphones, without electricity. And Nikola Tesla had an idea that I'm going to make this work. Everything starts with an idea, but then it has to be followed up by action. That action, and what gives the action potential, is your belief into your idea. That is where it all starts. Mind, and then the action potential that is fueled by your belief in yourself. Because trust me, when you will want to achieve the extraordinary things, people will oppose you. And people will tell you, no, you cannot do it. Why will they tell you this? Because they are judging the situation from their own perspective and from their own belief system. So they're not actually judging it from the point to say to you, you can't do this because you don't have the skills. They are judging it from their own perspective.
Do we buy now or wait for the pullback? Actually, you can buy now. Okay, so you can buy now, but your stop loss still have to be below. Your stop loss still have to be below this level, 72. So almost 100 pips, and that is too wide range for me. That's why I'm just here watching. Okay. Yeah, if not, I would have taken the buy now and still put my stop loss. So something like this, if you are buying here, your stop loss still have to be, yes, below this level to be safe. Then you are targeting right here. All right, and the stop loss is 110 pips. To me, I don't take such trades. Okay, yeah, but of course, if you want to take that trade, it's still valid. You can take it now.
So, blaming other factors.
I hope you guys understand.
Conditions, news.
I don't like that more big stop loss, large stop loss like that. I don't encourage such. So I will just wait.
Those things will always exist.
So this is what I will wait for. I will actually wait for the market to push up and pull back again. Then I'll take entry. Yes, this is a clear signal for a buy. Okay, but I'm not buying because of the stop loss. Only the stop loss, not anything else. All right. Yeah. So if you wish to buy, you can buy now.
Externally, live within. So me myself, I told you already. It's not that someone is a trading psychology coach, someone is a trader with X years of experience. They're no longer working on themselves. They are. We all are. Trading is a job of growth. We are always growing. We are always learning. Okay? Whenever I make a certain mistake, I take the accountability. And whenever I meant to make X amount of money, I decided to take extra risk. And if I lose, I just didn't deserve it. I either got too greedy or I've accepted the risk. So therefore, the reward is not here. I knew what I was doing. It's on me. It's not on the market condition. It's not on the news that is coming out. Oh my God, CPI is more volatile than last time. Like, I hate this. No, it's going to happen. The responsibility is on you. And until you will start taking the responsibility for your actions in the market, for your decisions, for what you perceive as risk as that, nothing will change because you will keep on doing the same things over and over again.
Good. So I like the pullback.
Acknowledge what are the things that are influencing you. And let's go back into understanding ourselves as humans.
Drop a little more.
Survival instincts that are causing the caution based on our past experiences. And that helped our ancestors to survive because our ancestors were learning certain patterns that when they go to X, Y, and Z place, there is danger. And because there is danger there, then they are learning about it. So their emotions are heightened. They are ready to pounce. They're ready to attack or defend. That hasn't been removed from our brains and our biology. We evolved as humans, but we are still working in the same manner. And like we said before, in the markets, you have to essentially predict the future, what is going to happen next. And Forex or any other market, maybe perceived as threatening. Yes, it's not life-threatening, like for our ancestors, but it is something that our brains will perceive as threatening and therefore try to revert back into that survival instinct mode. And this is where we have to recognize it. And once we recognize it, we can change it. So again, think about societal factors, like from a young age where you have been taught a certain message based on your culture, religion, parents, upbringing, etc., etc. Like I tell you mine, I'm from Poland and lived in the UK majority of my life now, but
Great.
whenever I go and visit my family, etc., and I speak to my family members, they're still in that culture. And even though Poland moved forward and is developing beautifully thanks to European Union, certain people's perceptions still haven't changed. So you've got extreme of people that are new thinkers, that are innovative, that are really in with the new world, and that are the old thinkers that are thinking, what do you mean you're making webinars online? Like I am able to reach thousands of people from this one spot. It's fantastic. But other people will say, that doesn't make any sense. You should see people face to face. Or they will say, what do you mean you're making money from trading? You should be working 15 hours per day in order to make X amount of money, because they've got limited thinking from their upbringing. They are different generation. They're thinking about money and how money can be achieved differently. And all of those things will have an impact. It will have an impact in terms of who you spend your time with, how your friends are perceiving money, failure, success, how your family perceives failure, money, success. All of those things rub off on you. Okay. Now there's another interesting thing that you may have never thought about, and I want to bring it to your attention because when again you've got that awareness, you are able to change those things, right? There is such a thing as fear of failure of success. Fear of failure of success, right? This is where it may sound like a paradox because, well, we are all doing this to succeed as traders because it's not giving us that ceiling. Because even in a job, like limiting beliefs, in a certain jobs, there's only a certain amount of money that you can make. In trading, there is no ceiling. So hypothetically,
So guys, you can go in and buy now, okay?
Maybe the markets, right? But some people may fear success, even though they want it, but they may fear it. Why? Because, well, first of all, they don't want to fail, so they don't even want to try properly. Because if you don't try properly, you always have the excuses to fall back on. But if you try properly and it still doesn't work, there are no longer excuses. You have to take full accountability and responsibility. So success in itself can bring a lot of change and a lot of responsibilities and a lot of attention to you. And that can be daunting because a lot more people may become reliant on this. Okay, so, once you start making a certain amount of money, you will likely change your lifestyle. In order to live that lifestyle, you need to maintain a certain amount of money and more. Then once, you achieve another level, you need to maintain that and more. There is a lot of responsibilities that come with that as well. And then obviously the most factor that is spoken about, especially in those webinars, is seeking comfort. Our brains are wired to seek comfort. I told you, your brain will do everything for you to have a solution that is going to resolve the situation for you immediately, even though if it's going to hurt you long term. So this is where we need to understand it. And we need to make certain decisions and calculate things in our brain about what risk actually means. What are the beliefs that are holding us back? So it really is about venturing into unknown in the markets, and trading requires that, and that can be triggered. So this is why there are certain limiting beliefs that are stopping us. So what is the impact? Okay, so it can prevent you from taking calculated risk and lead into missing opportunities, chasing the markets, experiencing FOMO, because you are not stable in a calculated risk into having that certainty. And because you don't have that certainty, then you will start deviating from the path that you need to engage with. It can cause you to second guess yourself, because obviously if you are experiencing limiting beliefs, You will start second guessing your strategy. You will start guessing yourself, double guessing yourself. You may have, without even knowing, that fear of success. And obviously that can lead to inconsistent results. Then that could encourage negative self-talk. So if you think about it, it's like negative self-talk, because it will start with the inconsistent behaviors due to limiting beliefs. So again, all starts in our minds. The way you will interpret the situation is going to be negative. Then you're going to make negative decisions in the market. You're going to start second guessing yourself because you don't have the results. You don't have the results. So that is going to instill lack of confidence. Because you have lack of confidence, you may have paralysis analysis, or you may start just executing in the markets in an inconsistent manner, and then you just stuck in that loop. Why? Because it all starts here. Again, all starts in our minds. How we perceive the situation. How do we understand it? What we're going to do with the information that is given to us from the market and from ourselves. What is the emotion that we are experiencing? How are we going to manage it? What systems are we going to put into place? How are we going to change our identity into understanding? Look, my upbringing and my culture has opposed some ideas onto me. Okay, and because that happened, I may be perceiving things differently, and I might be limiting myself from the money that I can make or how I can succeed and perform as a trader. So those are the things I need to do to work on myself. And we discussed it many times. Trading is like any other job. It is a job. It's a business, not just a job. It's a business, and you need to be the business's CEO, the director. You need to put methods in place. We don't have employees, we have ourselves. So, sometimes people think, oh yeah, I would be a great CEO, great this, great that. But really, would you? Because if you cannot manage yourself,
okay, so
you cannot understand yourself.
You're already pushing up.
In terms of being open to feedback from the markets, how will you take feedback in terms of your business if you're unable to do that? Because really, the feedback from the markets and feedback that you're giving to yourself is the feedback that is trying to provide you with knowledge so you can utilize that knowledge and use it in your advantage. So we need to recognize those things, because if you are stuck in that loop,
nice
or,
push.
Limiting beliefs and bad decisions and then self-doubt, etc., that will encourage negative self-talk. With negative self-talk, that will affect your mental well-being and your decision-making. And it will never change. And you will continue, I can't, I don't, I this, it always happens, and this and that and this and that. So we need you to understand it. And we need you to really take control of yourself in order to handle the volatility of the markets, because volatility of the markets are no joke. Okay, so I've got obviously a message for you. I will not just talk emptily and tell you off in a way, but I will provide you with what is needed, right? And as always, we have a webinar, then we have a workshop, and during the workshop I will break things down with you and for you. However, during this webinar, I will be breaking things down for you as well by giving you examples, because I really want you to think about it to the workshop. And workshop is going to be on Wednesday at 6 p.m. So I want you to think about it. And then if one of you wishes, message me on Discord and tell me what could be the potential limiting belief that you have experienced or have noticed that you are experiencing it. I will not reveal your identity to the group, but I will take on your limiting belief or a few people, and we will break it down. And I will help you understand how you can manage and tackle those things for yourself. But now, it's all about gathering evidence for your limiting belief, okay? Because now, okay, there are limiting beliefs, okay, they are stopping us from growing, but what do we actually do? What do we actually do? Because it's so easy to just have a go at traders and say, don't do this, don't do that, don't feel emotion, be performance driven, be disciplined, We're not giving any solutions. It's just pointless. What is the point in that? So here we're going to break it down. So I want you to imagine the tabletop method.
Why
So
is this different?
imagine that your trading beliefs, or not even trading beliefs, personal beliefs. So I'm going to give certain examples where you can translate into anything in life, okay? So
different things.
imagine your trading beliefs
See.
is a tabletop. Tabletop that you have there. And while the evidence or past experiences may support these beliefs, they will act as the table legs. Okay? Just to put it out there, in order for the table to stand, you need 3 legs. You don't need 4, you need 3, and that would support that limiting belief. Okay, so the limiting belief needs evidence in order to exist. And it's the tabletop, and the evidence is the legs, and the legs are supporting the limiting belief. So obviously what we'll be working on is the evidence. And how can we change that evidence? And I'm going to walk through it, okay? So there are 4 steps.
Okay, so this is what I'm going to do.
Like talking about it. Well, obviously there are further deeper steps that we're going to take in. But it's like, okay, let me identify a limiting belief. So let's say, maybe you believe I always make the wrong decision when trading Euro USD during
position,
high volatility periods.
Stop
whether
loss,
there is not open, New York open, whether that is news periods, like whatever that is. So that is your tabletop. I always make wrong decisions during London Open or Euro USD. So let's examine the evidence for that limiting belief. What experiences are you drawing this from? Maybe you had 3 consecutive losses during volatile sessions, and these are your table legs. So you have experienced losses during London Open. So let's challenge that evidence. Is that evidence actually of any strength? So look at these experiences and say, did I have a solid strategy when I was entering during London Open? Were there any external factors that could play a role in me experiencing losses? Let's say high impact news. And was I actually trading in accordance to my plan? So essentially, did I have a solid strategy? Did I execute according to my entry criteria, exit criteria, etc., etc.? You have to assess it critically, because that is going to give you the true evidence for your legs and whether they exist or not. Because you may think, well, actually, first of all, losses are normal as a trader. I need to accept them. But actually, maybe if I executed according to my trading plan and did not over leverage my position, or did not just execute because I was experiencing FOMO, then maybe I wouldn't even experience those losses. So you need to just critically think, am I just blaming the market like we tend to do as traders? Euro USD, London Open, always takes me out, they are faking the move out, the market makers, la-di-la-di-la.
26,
all right.
23, it's fine.
What is the responsibility that you taking for that? Was everything intact? Was it? Was it not? If everything was intact, maybe clearly your data is telling you don't trade London Open. Well, that only can be drawn upon if you say to yourself, yeah, I've done everything correctly. But if you haven't, then where is the problem? In the market makers or your decision making? Then reverse that process into positive beliefs as well. And think, all right, now that belief would be empowering. So with the right strategy, when I execute according to my plan, when I actually execute in terms of my entry criteria and exit criteria, I can capitalize on London Open Euro USD volatility if I just didn't get too greedy. So to solidify this belief, find evidence that supports it. I actually can capitalize during London Open if I do X, Y, and Z as opposed to what I was doing. So can you see how you are freeing yourself from that mind of everything is against me, the volatility, the market makers, the fake outs, this and that, to assessing the situation for where it is, taking accountability and saying, well, actually, looking at it again, if I just executed with larger stop loss, waited for that confirmation for my entry, I actually have a pretty solid strategy for London Open. So perhaps that is something they need to look at. Okay, and I will go deeper into actual kind of limiting beliefs, and I will go through the series of 5 steps to help you identify them, challenge them, etc., etc. But this is how you can flip things for yourself in terms of your growth, in terms of how you are looking at things. Because again, looking at things and blaming the markets, the volatility, the pair. How many times I hear people blame, oh, your agency is this, gold is this. And I'm just like, it's not a person, it's a market.
So finally at the 79.
The only person to blame for the decisions is you, because the market will move and do what it wants to do, despite whether you are in that position or not, despite of it. So really, it is on you. Now, let's dive into the 5 steps, okay? So obviously, what you need to do is identify the limiting belief. So I will give you a few examples here, and I'm going to make it one into the general belief about, for example, the perception of money, because I think that's a big one, and it comes from a lot of different cultures and our upbringing by certain families, like a specific family. It's not just like, oh, this culture thinks like this about money. It's not like that. It's not that wide. It's specific families may be thinking about money in a certain way, and the influence might be culture, and the influence might be the upbringing, etc., etc., etc. You know, so I will be giving examples about that, and also trading related example, because of course we are traders. But we need to recognize that a lot of limiting beliefs that do come into trading creep in from the way we perceive the world, understand the world, and the way we perceive ourselves. Okay, so step number 1, let's identify the limiting belief that we would like to change, and let's build it on personal experience. So the limiting belief might be, money is hard to come by, and I must hold on to it to feel secure. Okay, so what is the evidence? So I'm going to go deep here, but that's what this exercise requires. So number 1, table leg, maybe childhood experiences. Growing up in a household where money was always tight, and parents often argued about the finances. The evidence number 2, past failures. Trying to start a side business once upon a time, but ended up losing money, reinforcing the idea that earning money is difficult. Evidence number 3, peer comparison. So friends or colleagues of yours seem to always have financial struggles, making it seem like it's the universal truth, because that money is hard. Everyone's undergoing financial struggles. Everybody's struggling. So yes, money is hard to get. So let's now go into forex trading experience. What might be the limiting beliefs? So, and we're doing 3 because 3 is enough, but you can do more because there might be more. Okay, so limiting belief in forex trading or any trading, whatever you trade, might be, no matter how hard I try, I always end up making the wrong decisions in the market, especially during important news events. Okay? Now the evidence, recent trading losses, had series of losses during major news events or major news releases. Recently, for example, we did have, for the past few weeks, a lot of red folder news. Okay? Which obviously, if you've experienced a lot of losses, that could start a pattern in your mind. Now, number 2 evidence could be over-reliance on others. So what I mentioned before, we always search for that holy grail. So I followed a tip from a trading community or a trader that you speak to on a daily basis. It didn't pan out, leading to the belief that independent decisions are always wrong. So very common, and this is where lack of stability in your own thinking comes into play, because every time you will follow somebody else's advice, that trade may lose. Every time you will follow somebody else's advice and you don't engage, that trade will win. So what that means, you need to consistently, again, allow for that to play over time. Number 2, well, 3 actually, is that you should be making your own decisions. Nobody should say to you, well, they may, and say, no, I'm buy bias. Why you say sell bias on Euro USD? When I am sell bias in Euro USD, genuinely nobody's going to change my mind, because I know I can tell you exactly why I am sell bias, sell bias on Euro USD, and I can like tell you inside out, this is the reason, this is what I'm doing, because I am sure about my analysis and my end. So if 10 other traders have I bias, let it be. If I win, yes, I'm not going to let my ego to thrive. I just done my job. If I lose, okay, fine, I'm just doing my job. I can't allow other people's opinions to influence my perception of the market, because no other people's opinions are going to manage my accounts. I am managing my accounts. So I need to really stick to it. Now, emotional responses, obviously, when you experience losses, you may feel strong anxiety and stress during important market events. So then also, because you've experienced previous losses or blown some accounts during high impact news, because you didn't notice, because you wanted to trade it, because you thought you are safe, because you break even, all of those things. Now, whenever you perceive red folder news, which is very common, like we get red folder news almost every single day now, whenever you see it, that may trigger anxiety, because there is a brain pattern. Red folder news means losses. And then that will start reinforcing belief and personal judgment on yourself that you will probably mess up. So you will either, again, start hesitating during taking trades, you will start hesitating your analysis, like, should I come out, should I not, should I trade it, should I not trade it? And all of those things will have an impact. So again, identifying those limiting beliefs is about finding the evidence to support them. And we need to understand, okay, why are those things happening? And then once we understand what is supporting them, we can challenge them. And once we can challenge them, then we can change the foundation in our brain about how we understand a certain situation in the market and start restructuring our belief system, restructuring our responses, restructuring our emotions, restructuring our behaviors. So let's move into number 2, and I will continue with the same examples to show you how to break it down. So now, when you have a negative belief or limiting self-belief, what is a good practice to do in order for our brain to engage better is to replace your limiting belief with a positive belief, with alternative belief. Because as we have learned in previous webinars, it is all about rewiring your brain. So there is a neural connections that are, sending signals like electricity signals between one another. And as they are sending those connections, if we redirect the focus into other neurological connections, that is going to help to strengthen the new and weaken the old one. So it's almost like distracting a child with a new toy. If you just say to a child, don't play with this toy, and that's it, so that is limiting belief, and we say don't engage in that limiting belief, they'll have nothing else to distract themselves with. But if we say don't play with this toy, come, and we are going to draw instead, then the child is going to be more likely to say, oh, okay, I got something new to engage with. So it could be like a parent saying to a child, let's not play on iPad, don't play on the iPad, let's draw instead. If we just said, don't play on the iPad, the child may get angry and they will struggle to actually not play the iPad. But if we give them something else to engage in that's more positive, they are likely.
The Hunter just entered, guys, don't hesitate. Yes, I've entered already, guys, so you can go in.
So we need to identify the limiting belief, but then let's replace it with something more powerful. And we already learned.
Let's go and catch some pips right there.
Things that we can do to rewire our brain.
But remember, make sure you are managing your risk, okay? Because I'm risking 0.5% on one account. I'm risking 1% on another account. So I am good.
Come by, and I must hold on to it to feel secure. So now let's identify an alternative belief for that limiting belief. So the alternative belief could be money is a tool, and with the right mindset and actions, I can attract it and I can manage it effectively. Okay, now let me give you a simple example, not trading related. And I tell you the difference now between mindset that is limiting you and the mindset that is empowering.
Okay, so once I've entered this trade, I have to go off because I'm not supposed to monitor the chart once I enter the trade. So on this note, I will end this thing here. Then we are going to meet on Telegram. I have to go out to town. We are going to see to the end of this trade today. Okay, so I wish you guys the best, and let's see to the end of this particular trade. And I'm anticipating we are hitting the 3402 and 3426 today, so let's watch out. Okay, so guys, have a nice day and enjoy.
In the shop, they may say, no, we already have candles, we don't want it. You'll be like, oh my god, they don't want them. Am I going